Hi, everyone. I hope you're having an excellent day. The topic is refinances. Does it make sense for you to refinance? Does it not make sense for you to refinance? We're really going to be going over the pros and the cons and making sure that you're informed on why you should refinance and maybe why you shouldn't just yet. Hope you enjoy the video and thanks so much for watching. The number one con and the reason why most people will not move forward with doing a refinance is if the costs to set up the new mortgage outweigh the savings and the benefits of setting up said new mortgage. For example, if your penalty to break your current mortgage is $10,000, but we're only going to be saving you $8,000 by switching to a lower rate or doing the refinance in general, then it's very likely that it doesn't make sense for you to refinance. With this being said, you may have an ulterior motive to doing the refinance that may still make it make sense. And we can look into that on a case-by-case basis and kind of weigh the pros and the cons and see if it makes sense for your situation. Now, clearing that con out of the way, I want to move on to the pros of doing a refinance. And each of these is going to tell you if it may make sense for you to do a refinance. And if your situation currently fits one of these scenarios, then you can reach out to me and we can see if it makes sense. Now, number one, and the most common reason to refinance that I'm seeing currently with rates being so low is to switch to a lower rate. With rates being all the way from the low 1% range to up to 3% currently with our prime lenders, if your current rate is in the 3% range or even possibly the high 2% or more, it may make sense for you to actually do a refinance and save money on interest and possibly even save money on monthly cash flow. If you're a rental property owner, then you know how important it is that you actually cash flow on that rental property. Though it's more uncommon to see cash flowing rental properties nowadays with property prices, it is still possible, and there are still tons of people out there who are cash flowing a few $100s to $1,000 per month, if not more, on their rental properties. If you're a homeowner and you're looking to save because you want to put more money towards investments or to a fund to save for your child's schooling, or you just want to save in general so that you can keep more of your money to yourself, then it's very likely that this is a reason to refinance and it will make sense for you. Something that may tie into going with the lower interest rate is also lowering your monthly, your biweekly, or your weekly payments. When refinancing a mortgage, if you're not looking to take out extra equity, or you are, but you're not looking for too much, it's very likely we can find a way to actually bring down your payment so that you're paying less and you keep more in your pocket. For example, over the past few months, I've helped plenty of clients save hundreds, if not thousands of dollars on their actual payments per month. And that way they're able to put those funds towards other things that matter to them. All this while still taking out equity so they can do renovations or they can invest. That point being said, that takes us to our next pro. One of the large pros of refinancing is that you have the opportunity to take out equity that you've secured on your property and use it towards things you care about. As mentioned, this can be used for investments, for renovations, or large purchases where it may make more sense to tie that into your mortgage at a low rate than purchasing something directly from a dealer where the financing rates may be quite a bit higher. It's not always advisable, but this can apply to vehicle purchases. For instance, I've helped a client purchase a vehicle that would actually be used as equipment for their company as they were self-employed. The interest rate that they were offered to finance through the bank was 7% for this piece of equipment, but we just pulled out the money out of their equity and locked them in at a low 2% rate. Another reason to refinance is if you may be looking to lower and reduce or increase your amortization. By doing a refinance and lengthening that amortization out to a 30-year amortization, you can actually save on monthly cash flow and reduce those payments so that they don't impact further borrowing, or so you have a little bit more breathing room at the end of the month and you can do with that extra money as you please. As mentioned, you can also reduce your amortization. Most of the time, interest costs can actually be combated by just making prepayments on your current mortgage. However, for those who want to be extremely aggressive and pay down their mortgage very quickly, we may look at reducing the amortization and possibly even putting them into an open mortgage loan where they can make as many prepayments as they want with no penalties. This is another pro of refinancing. Since we're taking out that existing mortgage and completely reassessing your situation, we have the ability to set up your mortgage product to fit your current needs and your current goals that you may not have had when you first set up that mortgage. I hope you find this video helpful. I hope you enjoyed watching. Please let me know if you did. It means a lot to me. It makes me know that what I'm doing is actually helping people out there, and that's the main goal of these videos. If you have any questions whatsoever about anything mentioned or just general mortgage questions at all, feel free to reach out to me anytime and I would be happy to help you out. I will leave my contact info in the description. Thanks again for watching, and I hope you have an excellent day.